Hey, everybody, here for another podcast. Really excited today. We have Bruce Marks on. Bruce, thanks so much for taking the time.
Yeah, Dennis, thank you so much for having me.
And for those that don't know Bruce, he's gotten a lot of views on our channels with his War Story Saturdays, but he's a business acquisition specialist working at First Bank of the Lake. He's been in the business now for over 10 years and closed over 1,300 transactions and $445 million in those 10 years. So extensive knowledge of the space in the SMB world. And for those that don't know First Bank of the Lake, they're an SBA preferred lender nationally. So they work across the nation. And Bruce specifically, we're having on today to talk about some of the bigger loans. He focuses on what we call Pari Passu lending, which is an extension of the SBA. So we'll get into that today. But Bruce, thanks so much again, and I really appreciate having you on.
Yeah, look forward to chatting about all things SMB, Dennis.
So yeah, no, I mean, to kick it off, we'll just jump right in. I think what's a really cool product that you guys offer is if I'm in the space and I'm looking at a deal, everyone who listens to this channel pretty much knows an SBA loan is capped at $5 million.
Sure.
So sometimes you'll look at these online listings and say, look, this is a really interesting deal, but it might be $6-7 million.
Mhm.
So, how do you offer pari passu loans for deals? Let's just say, assuming they paper and everything, how do I think about the bigger loans in the market?
Yeah, great question. So pari passu, which means equal footing, it's a Latin phrase, and it actually means equal footing. And so think about it as if the SBA were lending $5 million, the pari passu is a conventional mezz strip, if you will, or second strip. We lend behind the SBA. And it's a conventional loan made by the bank to bridge that gap when you have a larger transaction. So let's say, for example, gentleman or lady finds a $2 million EBITDA business and the seller wants a 5 times multiple. So it's $10 million. How do you do that if SBA is only going to lend 5, right? So you got this $5 million difference. Well, in most cases, as most people know with SBA, you got to put in 10% equity. So if it's a $10 million deal and you got to put in 10 million, you put in $1 million in equity, maybe the seller holds $1 million. And so now you're at 8 and you would come to a bank like First Bank of the Lake and say, hey, we'd love to do this transaction. We'd like to take it down. Can we get a $5 million loan and then a $3 million conventional bank loan? And when they say pari passu, equal footing, it's the same terms and conditions as the SBA loan. So literally, it's like getting an $8 million SBA loan. It's a 10-year straight amortization, no balloon, no prepayment penalty, and the rate is the same, let's say prime plus 2 or whatever, for both pieces. So it's just like, it is 2 separate loans, but it's like, okay, I can pencil it, do my modeling, Dennis, 8 million, 10 years, prime plus 2, and you're
And
off
add
and
it
running.
on. Yeah. So for those, it's an extension of your current terms, but it's based off of your original SBA loan too. So that's a good way to think
Correct.
about it. And I think for individuals looking at that product, understand there's slightly different terms for the DSCR and some other things. Not to
Yeah.
get too technical, but what additional components of there are for these larger loans if I am looking in that space for a bigger deal.
Yeah. So as a bank, right, we have a risk and reward model. And so we're now even behind the SBA because our piece is behind the SBA. And generally, in these large deals, collateral really is not a determining factor when you're making a loan, right? So there's not a collateral. So generally, the SBA is unsecured, as is the bank. So if the bank's going to take a second position behind the SBA and there's virtually no collateral, the things that we're going to want to do to make up that risk is to get a little bit higher rate to get compensated for that risk, right? It's a risk and reward model. Everybody looks at investors, okay, what's the IRR? If it's not enough, we walk from the deal, right?
Right.
So the same thing from the bank. When I bring in a loan to loan committee for review, I've got to make sure that I'm pricing that model to associate with the risk that we're having. Another determining factor is the debt service coverage. Obviously, you want really strong debt service coverage to make sure that, and as you and I talked about the J curve happens. Everybody thinks that when they're buying a business, I'm going to come in I'm going to, oh, the seller's been absentee. He only works 10 hours a week. That's right. Like,
Yeah.
he's not really involved anymore. He doesn't know what he's doing. I've got marketing. We all,
I'll sit on the beach and drink margaritas, that whole thing. Yep.
yeah, it's fabulous. I love the stories, right? But that's just not real. That's just not the realities. And as we talked about, buying a business is one thing, but running the business, it's harder. So when we're modeling, we're going to model to make sure that we have a really strong debt service coverage. And the other thing is there's just a lot of things to factor in there. So we look at, the tax implications. If you're buying a $2 million EBITDA business, and if there's not a lot of assets in that business, okay, so you're going to depreciate, you're going to do the interest deductions, you're going to amortize the goodwill, you're going to write off the deal expenses. But if you're making $2 million in EBITDA, you're not going to get that down to zero, right?
Right.
You have to factor that. Even if I pull that down to $400,000 or $500,000, and you're in that 30%, you have to model that tax. You have to model your salary. You have to model the return to the investors, right? You got to model if there's a seller debt in there. You got to model the bank debt in there. So when you look at it and you go, wow, it's throwing off $2 million. And then you say, okay, less my salary, less my taxes, less the bank, okay, in 2 years from now, yes, if it's on standby and subordination, but okay, I might have a bullet. So I have to build cash to the balance sheet. It's not like I can spend it. Oh, God forbid I want to make some improvements or grow the business and use it as working capital, right? Like,
Yeah.
you've just got a lot of there. So when we're looking at those deals, we have to, and we consider all of that, because for us, in the way that I go to market is this is not about the bank making a loan. Yes, my job is to make loans, but my first job as a lender for First Bank of the Lake is to protect the assets of the bank and to make sure I'm making a good loan. But more importantly, it's got to be a good transaction for you. It's got to make sense. It has got a pencil. You got to be able to sleep at night. You're a business owner. Business goes like this. It does. I laugh at people and I go give me, projections, and then year over year, it's just growth.
Yeah.
Well, you tell me, is that like, okay, that's not really the way it works, right?
No.
And so you have to pencil for that, right? You have to be realistic. You have to look in the mirror and like what you see.
Yeah, no, once you really start to add it up, it looks a lot different than the headline number. And I think, a lot of folks, to your point, as they start to go through the math, think, oh, that's actually what it's going to throw off. And this is what it might actually look like once they kind of really dig in the numbers.
That's right. I can remember a gentleman, it was a war story Saturday, but it's one that resonates with me because the call we didn't do the deal, but the call is super meaningful for the both of us. I got as much out of that call, I think, that he did. We were looking at a transaction. He was penciling a large deal. It was a, standby for 2 years. And we looked at the remaining cash flow and we started to get into this conversation of what was it going to take to really take the business to the next level? Like, how much working capital? And a lot of times when folks come to me and we start to have working capital discussions and we get really deep into the working capital discussions, it's like based upon what it is right now. But if you expect any type of growth, 5, 10, 15%, whatever the case may be, that takes money to do it, right? It might take buying product. It might take hiring people. For example, when I joined First Bank of the Lake 5 years ago this month, I was employee number 13 in our SBA group. We were just starting up. Today we have 303.
Wow.
Right? We were a sub $300 million bank. We're now a $1.5 plus billion bank. So think about what our payroll was at 13 versus what it is today at 303. Right? Like, so we've had to do a lot of things to be able to sustain that growth, right?
Yeah, there's a lot of new
So
spending that people just don't think about in that sense
yeah,
too. Yeah.
so we started to talk about this deal, and the thing that makes me think about this often is we started to plan of, if he does that, if he uses the money to be able to take the business to the next level, will he have enough, even though the loan was on 2-year standby, to be able to start to pay that in 2 years? And when we modeled it out, he was like at a 1.24 2 years from now. And he's like, that is just so tight.
Yeah.
I just, it might look like it pencils now, like 1.3, because people always call me, Dennis, I'm sure you too. Well, what are you comfortable with? What's your bank's DSCR? What are you
Right.
comfortable with? Right? Everybody asks me that. I always come back and say, well, what are you comfortable with? What can you live with?
Right.
What's okay by your standard, assuming you want to do this? Or what if business drops 10 or 15%? God forbid you want to give yourself a raise. You want to go from 125 to 150. Can you do it?
Yeah. Unexpected lease change, something like that. Just a cost, any line item that comes
Any
up for them.
any line item, right?
Yeah.
And it's real. So the majority of the conversations I have with S&B owners is, and I'm pretty frank about this, it's not just, can I get an SBA loan? But all the factors that go into making it a good transaction for all parties at the table. In my
Yeah.
conversations with people, Dennis, honest to God, when we start talking about SBA, it's 3 to 5 minutes and you're done. Okay, do you put in the right amount of equity? Is the seller holding the note? Do you have a good PO? Blah, 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 right? And you're done. Then you're spending 55 minutes about the deal, the structure,
The people.
tax implications, just all of it, right? What's the LOI going to look like? And, most people are like, well, I just want to get the deal under LOI. And then they get the tax returns and they're just, right, like you're shaking your head. Why do these not look close to the sim or the P&Ls that I've been modeling for the past 2 months?
Yeah.
Like,
Why did I spend all this time getting so nitty gritty? And to your point, you could put together the model and all this stuff, but the numbers are pretty straightforward. It's more the story, the operations, the labor, customers. So much more goes into it that you really spend your time on.
yeah,
But you
I
kind of,
would tell you,
oh, go ahead.
yeah, I would tell your audience that, look, a very important point is the SBA is the sister of the IRS, right? They're both governments. And the SBA uses tax returns, right? Everyone
Right.
says, okay, well, we'll start to engage when we do a Q of E, and we want to make sure that the Q of E, and the SBA is not, you know, a huge ad back lender. If they're legitimate ad backs and they can pass the smell test with the IRS, this is legitimate. Give you an example. We had a gentleman who was looking to acquire a business. The seller son was in the business. The seller was paying for the son's schooling, but the son was taking, his primary major was exactly what the business was. So and the son was going to an Ivy League school. So it was a big number.
This wasn't cheap. Yeah.
It wasn't cheap. But is that a legitimate ad back? 100%. Right? It's like if we have bank employees and they want to further their education, we will compensate them for that, right? Like that's
Yeah.
a normal thing in large companies, right? So it's okay with small companies. That will pass 100%. But I literally had a guy, oh, well, the seller, redid his kitchen at home and he put in $50,000 worth of appliances. I can't make this stuff up. And that's an ad back. I go, well, I don't know if the IRS would
I,
allow
yeah,
what?
I don't think they would agree, but it's definitely an ad back. I mean, no, but it's fascinating. Like we said one the other day, or one of these guys posted the other day, and it was a negative cash flowing business. And usually I don't like to add those back, but he was pointing out one of the line items, like 25% of their revenue was for a company wide function every year. And it's something where he's like, look, not that we don't need to keep running this event, but that's a huge number to have as an expense line item in this tiny little, add-on M&A deal he was doing. So some of
Yep.
this stuff you can, but to your point, I always stress to our guys and gals is just when you go to the lenders, make sure you justify all these things with a very strong description of what you're including there. Because if it's all add backs and made up stuff, they're not going to accept it.
Yeah, it doesn't make sense if you come into me and you say, "Oh, Bruce, I'm buying a business for $3 million, right? I'm paying let's say a 3.5 or 4 multiple, right? And it's throwing off $750,000. And I look at the tax returns and it's, making 106, right? And then I've got $600,000 in add back. That's just, you have to look at that and just go, that's probably, and there's, as I've always told everybody, there's consequences to your action. And Mr. Seller or Mrs. Seller, those are the consequences of your actions.
Yeah.
You,
I think there was kind of like yeah, and that was like the next section I was going to get to is you've seen so many more transactions than a lot of people. Is what are the biggest mistakes you see people make? I think we've already touched on now people not maybe looking at enough expenses in the first 12, 18 months, which are crucial.
yeah.
But what other mistakes do you think people make when they come into your office and you say, well, just try again before you come back to me?
I'd say one of the biggest mistakes I see is understanding the seller's motivation to sell. So I always put it as a seller will sell because either he wants to, he needs to, or he has to. And there's 3 different needs, wants, has to. And the reason matters a lot. And it matters to whether I will look at the deal. And as I'm always frank up front, I might not like the deal, but that doesn't mean it's not going to get done. It just means it's just not going to get done with me, right?
Yeah.
But understanding the seller's motivation has a lot to do with whether that deal gets to the closing table. And I can tell you that in 2022, I had 4 transactions. In 2023, I had 5 transactions. And in 2024, I had 4 transactions. That's 13 transactions approved and in closing that never hit the closing table, that didn't close. And so that means a lot of people lost time, opportunity cost. They started diligence. They brought in their attorney. They went through the bank application real dollars spent, and they're all the way down the line. So they finished with the Q of E, right? They've maybe worked on the purchase agreement. We're in closing and the deals don't come through. And so a lot of the times it's understanding the seller's motivation. If the seller says, listen, I've got to sell the business because I'm 76 years old. I've been doing this for 30 years. I want to spend time with my super valid reason, right? If the guy says,
we focus most of ours on retirees, to be honest, because it's such a black and white reason for the sale. Yeah.
But I see, I started an e-commerce business 3 years ago. I'm 32 years old and I just don't want to do it anymore. I guess I'm tired of making $1.3 million. What are you doing? You're running an e-commerce business. You're making $1.3 million. You're 32 years old and you're tired.
Doesn't add up.
Tired of what? That's going to be like that's a red flag for me, right?
Yeah.
Just because I've seen it. So why your seller is selling is super. Another huge reason, probably the biggest reason I see deals blow is the working capital pay. That's primary the number one, because what happens is, Dennis, as you know, is they're going to go in and they're going to sign an LOI. They don't have balance, right? Okay, well, we don't want to disclose the financial information until we have a signed LOI.
Yeah.
So you're submitting an LOI without 24 to 36 months of balance sheets, right? You don't know if seasonality comes into that play. You don't know whether maybe they were coming out of a COVID period and it was pent up demand and they had a great big spike, and all of a sudden in 24, the numbers went to crap and it shot down like this, right? Like, you know all this, right? Like you're like, oh, Bruce, I've heard this a zillion times, but it's the common thing, right? So, working capital and getting to that number. And a lot of people sellers don't understand. Dennis, wait a minute. I made that sale. I used my product. It's an AR do me. And you want me to leave that to you?
Yeah, it's a really hard conversation for a lot of these sellers.
It's a
Look, they
real,
don't. I think people overestimate maybe how much time folks spend on the financial part of it. But if their job's landscaping, they landscape all day. They don't really focus on working capital, right? So you have to make sure you have that conversation up front because, to your point, you don't have all the information yet. But a lot of times, we'll see it too as people fail on these deals because they don't have the conversation. They're 6 months down the line
yep,
or 3 months down the line, and everything falls apart.
yep,
So
yep.
I'm sure you see it
So
too.
the working capital and so I'm a real, I really like, and I will get deep with when I'm having initial conversations. Let's look at what we have to kind of get a stronghold. And when you do most people, because they're either getting investors or what have you, they're going to do a Q of E. SBA does not require a Q of E. There's nowhere in the SOP that says you need one, but it's a good idea to get it because that's what you're buying. Obviously, is cash flow. That's
Yeah.
what investors are investing in is the searcher, but obviously the cash flow as well and a return, right? So they want to make sure that it's there. But I always make sure that they go through the exercise of looking at what growth might look like, looking at how much working capital they need to need, and having that conversation with sellers. It's a really hard conversation. And I've spoken with a number of business brokers to try to just educate myself so I can share with my clients, like, this is the things that the roadblocks that you're going to hit, right? And they always just continue to tell me, Bruce, to sellers, the guy started a plumbing business 25 years ago. He had a truck, right, in his wrench, and he started it, and now he's built it. And you talk to him about working capital and the conversion cycle and what that looks like. And he's going to look at you and go, I don't know how many times I've got to turn to get to that number. I just don't
Yeah.
know. Right? So that's a big stumbling box, is the working capital part, why sellers are selling, the tax returns, flushing out, people modeling off P&Ls is just, it's really, I literally 10 minutes before this call, somebody had sent me an email. I got a lot of emails. Hey, Bruce, can you look at this deal? And I quickly open it up and I'm looking at it and I'm seeing, okay, this and this and this, and I'm seeing the broker's sim, and then I'm seeing all the add backs, right? So, and then you're looking at, okay, it's showing 1.3 million, but yet the net income is 432,000.
It's a tough bridge for the lender. Yeah, it's just hard to
Like,
do.
how am I gonna say to the SBA, yeah, this guy cheated, or not cheated, but wrote down or did whatever, $800,000. And now when I come in and I get audited by the SBA comes in every year and audits our files to make sure that they're sound. As a PLP lender, you have to maintain that status. They don't just, it's like reputation. It's earned. It's just not given, right?
Got it. Okay.
So everyone wants to know, are you a PLP lender? Can you approve on behalf of the SBA? Yes, but you've got to maintain that status by maintaining the level of integrity, making sure you dot the I's and cross the T's, so to speak. So they review our files. If they come in and they review the files and go, Bruce, what are you doing here? Like, this isn't prudent lending. Yeah, you can lose that status pretty quickly. So we make sure first and foremost that our guarantee is intact, so that we're going to go back and we're going to check. But that's another one, right? Like, okay, making sure. So the add backs, the working capital, the reason the seller is selling, P&Ls. And then the sellers, I say this often, I don't mean any disrespect to anybody that might be listening, but generally people hide the peas underneath the mashed potatoes. Like you're sitting down at dinner, you love mashed potatoes, and then all of a sudden you take a bite and oh my God, I didn't know there was peas underneath it.
Yeah. And no, like people ask us questions all the time. Like, what about this listing? It looks a little bit too rosy or something. And I'm like, look, until you have a real conversation, you're not going to really get into it. It's
Yeah,
really going to be buried in there if there's a problem.
right.
So, some of these diligence processes will go on for 2 months, and then a bomb hits them, and they're like, I never expected this. But it's hard sometimes. I mean,
Yeah, and you know, you have to look at the business. You have to, if you've got a business with a lot of CapEx and you know it's a lot of CapEx and over the last 2 or 3 years, you've seen very little. Well, that's a telltale sign. Well, maybe he hasn't reinvested because he wanted to sell. He wanted to inflate his numbers. He didn't want to invest in it. And now all of a sudden you're going to step in and go, holy muckety muck. I've got to go ahead and I've got to spend 3 times. And I've heard those stories before. Believe me, I haven't.
Yeah.
I've heard them.
We had a seller approach us, and they basically scraped out all the cash they possibly could the last 2 years. And I said, respectfully, we're not going to work with you because I don't want to. No buyer should have to look through this, right? You guys took all the money for yourselves, just liquidate and shut down. But
Yeah.
you do see it sometimes, and I think that was kind of my next question there. Anyway, was for you. For those that don't know, Bruce is also an investor and owner in some SMB businesses, and he's been on the operating side as well. From that standpoint, I get the question all the time: what companies do you like? What companies do you don't like? So I'll throw it to you. Kind of, what are the top 3 companies that are either, we don't have to say don't like, but are hard, and maybe the top 3 that are a little bit more appealing, we'll say.
Yeah. So manufacturing is hard. It's hard. I get to see not a ton, but very seldom do I do any because of the working capital, the CapEx, and sellers going like this. I know the business made $400,000 last year, but I got $3 million in machinery and equipment out there. I want to get paid for that.
Right.
Yeah, but on a 3.5 to 4 multiple, your business is worth $1.6 million, Mr. Seller. But I've got $3 million, and I paid $3 million for that machinery equipment. I want to get paid. And maybe they owe money, right? Like they've got, and then they realize. So what I tell people is, and this is a big thing, and I'm going to answer your question is the hard one, but I don't want to lose this thought. What happens a lot of times, Dennis, is that people, I see this often, so let's want to bring it up. People will go in and they'll say, okay, Mr. Seller, I want to buy your business. It's throwing off $1 million. I'll give you a 4 multiple. So $4 million. Okay. But I'd like you to hold a 10% note. Okay. And the business has got to come with $500,000 in working capital. You got to leave me $500,000. And 3 weeks later, the seller in the middle of the night has an epiphany and he wakes up and he says, all right, I know I'm selling my business for 4. I'm excited. Oh, but I got to hold a note for 400, so I'm at 3.6. And he also wants me to leave 500,000 in working capital. That has nothing to do with, it's a debt-free, cash-free, right? I've still got to leave the 500 in working capital.
Yeah.
Right? So, okay, now I'm down to 2.9. I got to pay my broker $200,000. So I'm now down to 2.7. I've got to pay my attorney $100,000. So now down to 2.6. And I got capital gains tax.
Yep.
I'm at $2 million. I'm at 50% of what I just thought I was selling my business at. I'll keep it 2 more years and take it off the market. That happens a lot. A lot. And so you have to diligence for that scenario. And I always tell my borrowers, make sure you have that discussion that the seller is not going to have a heart attack when he sees the settlement statement and realizes he's walking away with 50% of what he thought he was. So that was prior to another reason that, we see deals implode. But
yeah.
So manufacturing is a real, not that we don't do them, but it's a tough one to get done.
Yeah, it's tough. It's also a small part of the market overall. I think it's like 10% or something, whereas home services is probably like 40.
Small part of the market. But deals that, like, it's a hard and fast no for me is anything retail. Like if somebody calls me and says it's a retail period, whatever, I'm out. I don't like, I'm not a fan of apparel businesses, and I'm not a fan of what I call want businesses. I'll give you an example. A couple of years ago, a gentleman had called me up, Bruce, I'm looking at buying this business in Texas. Okay. Light manufacturing. It's got real estate in it because everybody thinks, oh, it's got real estate, so it's got collateral. The banks are going to like it. Not true. But I'm buying the business and I'm buying the real estate. It's a $4 million deal. The real estate's $2.5 million. The business is 1.5. So I want a 25-year loan because the real estate is more than the business. Okay. What do they manufacture? Kayak. I'm not like, I'm not doing,
A
I'm not
seasonal,
lending.
yeah, adventure thing. Yeah, exactly.
No, last I checked, no one needs a kayak to survive, right? So when I look at businesses, what now getting into the three that I really, really like, roofing is probably my number one. Why?
Interesting.
Dennis goes on a date, comes home with his significant other, opens up the door, drip, 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 and call the roofer. It's 11 o'clock at night. I don't care. Get him out here because
Yeah,
it doesn't matter whether you want to, you need to, you gotta fix the roof, right? So it's a need-based business. It's a home, and
it's a
it's
huge
never
market.
going away.
Yeah,
If you want to have a roof over, that's the expression. You want a roof over your head. It's where the expression comes from. Well, you got to have a roof over your head. That means either you got to replace it or you got to repair it.
yeah,
A or B. And it's got a useful life that's going to force you to do that. Right? So
yeah.
love that. HVAC, plumbing, business services, love. And then what I love is I love businesses that are unique and sustainable. So even as an investor, when I look at businesses that I'm going to buy, I look at it and I say, is this business going to be around 15 to 25 years from now? Because that's sustainable. And that means it can withstand market trends up and down, right? And if it's a need-based business and it's got longevity and it's a little bit unique and it's sustainable, and that's just a formula for success. I mean, it's just bring it home, baby. I mean, it's just like,
Yeah.
yeah, that's it. That's it.
No,
Right?
as we kind of have evolved, that they're studying all these different companies. We've done a bunch of them now, but the niche ones you find are it's just fascinating how people make money out there. And some of those are just really, really good
Now,
businesses that just have a nice customer base.
one of the most unique businesses that I had the opportunity to look at, and by the way, did not get, another lender did, was this lady had called me up and she said, Bruce, I've got a sim. I'm very, very interested in this business. I said, okay. She said, it's selling for $5 million. Okay. Where's it located? Downtown New York. Okay. What kind of business is it? Dog walking. Woman was out. She had a dog. Somebody asked her, hey, notice you're walking your dog. I just got a new job. Would you walk my dog twice a day? Yes, I will. It's going to be $25 a walk, $50 a day. Boom. 2 dogs on the leash, 3 dogs on the leash. All of a sudden, somebody's calling, hey, can you walk my dog? Hire somebody. And this woman scaled this business and sold a dog walking business in downtown New York for $5 million.
Yeah, I mean, there's talk about a need. I mean,
and it was interesting when I brought it in because at the time, my boss lived in downtown Chicago, literally downtown in the Loop. She had a dog. She worked at the bank. She had a dog walking service.
she had a dog walker. Yeah.
She had a dog walker. So when I brought it up, I go, this is the case. She's like, Bruce, this isn't new. I got it. We used to call him King Louis. His name was Louis, but of course he was the king because you're King Louis. And my friend Diane's great. And boom, she was like, very sustainable business, not going anywhere. People work, and maybe when COVID came, it was a little bit different. I don't know. But, you know,
Yeah, trusted dog walkers are hard to find. Like someone who you can trust and is going to come on time.
But you know, the pet industry, the multiples are off the chart for the pet because
Huge.
people do, like, you want to talk about sustainability? Come on.
Yeah. No, I agree. The pet industry is a great one. And
Great one.
I think too, you touched on something that we get a question all the time about, which I meant to ask you a question? I think we could finish up with this one and maybe a couple others, but um, we see these companies all the time, and to your point, they have a smaller cash flow number, but they're very equipment heavy. So tree servicing, anything with construction or excavating. Sometimes you'll see real estate included, like you mentioned. How do you think about that from the bank's perspective, and how would you approach a lender? Because what we'll have is we seem to have a disconnect. Some folks will go out and be like, "Look, we got this great company. We're under an IOI or an LOI, or
Mm.
approaching that stage. We want to go talk to lenders." But they've given them a price that doesn't make sense with all the equipment involved, because the seller obviously wants to get compensated for that equipment, and the buyer is telling them, "Hey, I want to base this off a multiple." So, is there any advice you could give there as a M&A advisor perspective to folks to how to approach those conversations? Because it feels like people do want to maybe get involved with some of those less sexy PE plays, but in the terms of boring business plays, it's a really nice business that throws off cash, but has a lot of equipment. How do we
Yeah.
look at that multiple from
Yeah.
a lender's perspective?
It's tough, right? Because for that purpose. And a lot of times what I'll advise or consult with the client is
This is for informational purposes only, of course.
yeah,
Yeah.
yeah, is sometimes you've got to switch places with the seller. Sometimes you have to see if they can understand what you're looking at and you understand what they're looking at, to see if you can meet in the middle. So if you're the seller in that case, I'm going to come to you and go, "Hey, Dennis, look at in this world, I'm willing to pay a multiple of the cash flow, but you can't produce the cash flow without that equipment. So if you don't have the equipment, you can't produce the cash flow. I understand you want to get paid for the equipment. Which do you want to get paid for? The equipment or the cash flow? Or maybe we put some value on both and try to split the difference. And maybe you hold a longer amortized, because equipment, depending upon if like you're in the printing business and you're buying a Heidelberg press, that equipment's got a useful life of 25 to 35 years, right? Because you're only then sucking out the guts, right? So how are you amortizing that? So a lot of times when it's very heavy in equipment and maybe they own loans on it, or maybe they're leasing it, right? And you show them, well, if that equipment is coming and you want me to assume the lease, that's additional debt. And I think what works is when the seller is a creditor as well. Okay, you're going to get a bank loan, but you're asking the seller to hold maybe 15 to 20% in those type of transactions. And maybe you amortize those out a little, because what people have to understand is just because the seller is going to hold a note, Dennis, it doesn't have to be one note for just whatever. You can have 2 notes, 3 notes, 4 notes, whatever makes sense, right? Just like people do notes based upon tranches of performance. SBA doesn't allow earnouts, as you all know, but you can have, never use the word forgivable, by the way, because that creates a tax consequence, as you all know, but a contingent seller note based upon performance.
Yeah.
What about a seller note that helps towards paying for that equipment that's on a much longer amortization? And it's a discussion between you and the seller to help bridge that gap.
Yeah, no, it's just a tough, and to your point, it's a tough conversation either way, but that might be the way to do it. You start on both ends, then you come to the middle a little bit, have a conversation, and then see what works, but also give the seller some perspective. I find individuals who go down that path and don't have that conversation often lose the seller towards the end. And the conversation is, well, you should have talked about that up front more, right?
Yeah,
So
because if you explain to the seller, look at, if you were me, does this make sense to you? Would you do this? Now knowing what you know, you're the seller, you know it better than me.
then that's the liquidation problem, right? A lot of these buyers will come to us and say, this guy, is charging a crazy multiple, but he put $3 million of equipment in that thing for his perspective, right? So I try and say to them, look, this individual put up $3 million over whatever it was, 10, 15, 20 years of running this company. They want to get compensated for that, right?
Just
And
like I
that's,
said on the manufacturing, right? They put all
yeah,
this money in, right? We were talking about the same thing. They put all this money and I got $3 million in equipment there. I want to get paid for it.
Yeah.
But it's a hard concept to understand that if I don't, I can't earn the money. The money is a result of it. And I remember sitting next to a friend of mine who used to sell leases. And they would always say to him, well, what's the lease payment? And a friend of mine, his name is Eddie, and Eddie would always say, it doesn't matter. It only matters what you can make with that piece of equipment. So if I'm charging you $400 to lease that equipment and you can make $8, it didn't cost you $4, you just made $4.
Yeah.
And it's just another perspective, right? Okay, Mr. Seller, you bought and you invested, but this is what you made over those years, and that was your return for doing that.
And you had the depreciation and this other, all the other benefits.
Absolutely. You got all the things that go, the benefits of doing it. Benefits of growing your business, benefits of making the money, benefits of depreciating, benefits of maybe you Section 179'd it, boom, you got it right, and you got all of that in the first year or two.
Yeah. No, thank you.
People don't look at that. Sellers don't want to think about, and they do a lot of times, as you all know, is they don't want to maybe show as much income because they don't want to pay much as taxes, right? But when they go to sell the business, they forget about that benefit that they've already been rewarded for.
Yeah, the laundromat ones are the classics. They're just all kinds of issues with the matching up and everything. But
very tough business.
Tough business. But very popular for the social media crowd because, they are somewhat semi-passive. If you get the right one, it just takes a long time to find them. We've talked to a few operators there. It's tough, and they get their hands dirty.
It's location, right? The lease matters because that, pennies in that business matter.
Yeah, we had one guy fail because he got 8 months in, and the landlord handed him a huge tenant improvement cost at the very end.
Yep.
That he didn't negotiate up front, and he had to step away from the deal. Like, to your point, a lot of painful costs already down on the table, and it's not a good feeling.
Yeah, that's why retail is, for me, I remember this woman wanted to buy a small day school, and it was in a retail plaza location. And I said, before I do anything, I'd check the terms and conditions of the lease. Maybe that's why she's selling. Maybe she's getting a big bump up in the lease. And the woman said, I didn't even think about that. I said, but I did, so it's okay.
Yeah. No, you've been doing it.
And the next thing I get a call, then, 2 days later, oh, God, I'm so glad I spoke with you, Bruce. I'm like, oh, okay, well, good. I'm glad I saved you, so to speak. But it's those kind of things that, like we talked about earlier in the show about the DSCR, it's those kind of things that if you're modeling that you don't account for, right?
Yeah.
It's the O's that you've got to watch out for.
Well, I mean, I feel like we could have you on here for, another hour or so, but
are we done? Like this, we just started. What do you mean?
No, I know. We'll have to have you on for part 2. I'll ask everyone for questions for you, but I think we've gone through a lot of the hard questions, which is what really people really do want to hear, but also just like to finish on a positive note. You've been in the industry now for 10 years. You've seen 1,300.
No, I've been in the industry I made my first SBA loan in the 80s.
Okay.
So
yeah, 35 years. Sorry.
Yeah, there you go. So 10 years, clarify, the last time I made my first search fund loan in 2015. So I've been in the search fund space strictly as a search fund lender for the past 10 years.
Got it. Yeah, I had the 2 notes here, but 35 years total. So in that sense, what have you seen recently that gets you excited about the SBA going forward, this SMB world, what you've seen online, maybe the last couple of years, because it's obviously changed quite a bit. So for people who are just getting into it, sometimes we hear, it's a really crowded space, but I believe it's just kind of getting started. So what do you think going forward gets you excited about the space and what you've seen just talking to people the last couple of years?
Couple of things that have been major is the new NAICS code that allows you to buy another business. I'm working on a transaction like that, potentially in a transaction like that right now, where that wouldn't have happened a year ago.
Yeah, and for those out there, it means you can buy multiple industries in different NAICS code up to $5 million, which was just announced, I feel like, in September of last year. So pretty new.
Right. So that's really exciting. I'd done War Story Saturday, this past Saturday, about, the change of ownership and a gentleman buying 88% and the seller retaining 12% and getting a second bite of the apple. That's new. right? And that's exciting. So the SBA is listening.
Yeah.
They want to have, they want to make sure that they have access to capital for small businesses. Being able to do pari passu lending for me was to be honest with you, Dennis, kind of a game changer, because it allowed our bank to look at larger transactions that are a little bit more complex, transactions that, are unique and fit that bill. And it allows us, for me, it gets me excited that I can use those tools that I just mentioned to put First Bank of the Lake on the map, so to speak, allow us to grow our bank, allow us to be a player. Thinking back 5 years ago, when I joined, it was, who do you work for? And, we weren't even on the radar, and now we're, a top 10, SBA lender in the country. And we've got a really strong team, and the SBA allowing us to use those changes. They took away like the personal resource test, where before, if you might remember, if you had too much money, you couldn't, right? You'd have to inject it into the project rather than borrow money from the SBA. So they removed that. The affiliation clause, they've loosened the purse strings on that, if you will. So over the past several years, they have really been small business friendly to allow search funds to write. Because before, you think about it, and we'll
Even like the
post
latest
about,
change with some of like the early kind of earn out language you're introducing, like that's brand new, and that to me is long overdue, right?
well,
Where
yeah.
earn
And
out, when I say
before,
is traditional, what the PE folks focus on, but it's called the multi-step function of ownership change, what they're calling it. But the idea of that is kind of a new idea. To your point
but
of
even the
opening this up.
forgivable or the contingent seller notes, that was very difficult, because a couple of years ago, there was in the SOP a statement that said you could do nothing to change the price of the deal. Nothing could change the price of the deal. Well, now with forgivable seller notes, in effect, you do change the price of the deal, right? So them allowing that language and the ability for small SMB searchers to do that has really changed the landscape. So there's been several things that have been super exciting, in partnering with Anne Marie Murphy, who runs the SBA group here at First Bank of the Lake, who sits on the board at Nagel as well, and is very involved. And she is the one that's called to the Hill when they're talking about small business. Is a big part of all these changes that Nagel, which is the National Association of Government Guaranteed Lenders, in our organization have been a big part. Most people don't know it, into making all what people now see happen. Like it's the people behind it,
Yeah.
working with Congress, working with our small business, committees to make all these changes. And it's, super exciting. We always talk about AI and everything that's going on and ease of application. But, I made my first SBA loan in 1986. Today, although the application process is easier, right? Because you're doing DocuSign and it's online, it's still an application process.
Yeah, it's so
Right?
lengthy.
You still got to fill out the forms. You still have to answer the questions. You still have to underwrite the deal. We still have to make those decisions, right? And so it's been terrific to see when I first, and I know we're running out of time, but when I was making my first SBA loan, the maximum SBA loan was $500,000.
Wow.
$500,000. I still have pamphlets from when I did that and what the wording of the SBA was. So for me, growing up in this industry and seeing the changes, don't forget, back then I was doing stuff on a typewriter. I would submit my loan and I know I'm dating myself, but all of those years of experience and all those years of experience as a business owner, an advisor, an investor, a lender, the thing that gets me excited about my job and doing what it is every day is being impactful to the folks that are listening here today, and how I can help change their lives and hopefully be impactful to them if they get an SBA loan to allow them to buy a business. That's what we're both, right? Like that's what we're here to do, right? So.
Oh yeah, look, I really appreciate you taking the time. For those looking for Bruce on the internet, he's mostly on X, so SBA B Marks at. He does his War Story Saturdays every Saturday. We've shared a few that most of you have tuned into, so that's where to look. And Bruce, thanks so much for taking the time today. I really appreciate it.
You're welcome, Dennis, and I look forward to taking you up on that next round.
Yeah, we'll have you again. This is great. Thank you so much.
You're welcome.